Board Heroes here at Vox Markets for Tuesday, April the 12th. Starting off with Ben's Creek, where I think it flagged it at the weekend regarding the old resistance becoming new support and the very strong price action that we've seen all the way up in that form. Current situation, we're just toying with the all-time highs just above 98 pence and had a little foray through the £1 level. It looks as though that we'll hold this support line there from back in January. That's around 88, 89 pence, and above that looking for as high as £1.20 or £1.25, maybe as soon as the end of next month. So looking pretty strong there. Early really back below the low 80s, delaying the upside scenario, but ideally we stay above 88, 89 pence ahead of a further push to the upside. Had one or two requests for Clontarf, which I think last week, which I managed to miss, I think. Here we've got a situation where the requestees got it right. We've got a rising 50-day moving average after that bear trap below 0.21. Current view is that the longer we stay above the 200-day moving average and March resistance at 0.26, the greater the chance of at least 0.36 at the top of that broadening triangle, which has been drawn for quite some time. 3.36, obviously, then we're back to the one-year highs, but 0.36 the level and 0.26 the level to hold, really. Otherwise, this move could be a flash in the pan, which we hope it is not. On to Empire Metals, which seems to have rehabilitated itself quite well in the recent past. We've had a double bear trap gap reversal, so two bear traps below the 1 penny level over the start of 2022. Unfilled gap to the upside through the 50-day moving average, which off the lows is normally a significant sea change in opinion, and another gap to the upside that we had last week. So looking pretty strong there, rising 50-day line and above the latest gap around 1.3 pence. We could see the shares up to 2.2 pence maybe by the end of next month as well. So looking pretty well set there for Empire after a rather torrid year on the back foot. Another stock which is very popular is Global Petroleum, and maybe with the latest price action will become more popular. Just see the shares breaking that line of resistance from back in February at 0.73, so an end-of-day close above that. And we could be penciling in a target as high as 1.2 pence, which is that one-year resistance line projection. And maybe see that over the next 1 to 2 months, or maybe by the end of next month, we're lucky. Stop loss at the moment back below the 50-day moving average at 0.68 and really well below 0.6, which was old March neckline resistance, really scuppering the idea of a move to the upside or a decent move to the upside. We'll just have to see whether it's not a one-day wonder as the rally that we had in January. But you can see the shares actually moving as I speak, so it seems to be quite a live situation. On to Jersey, which has been another decent situation in the recent past. We had the spike at the turn of last month, Golden Cross as well, versus around 180. And today's, the start of this week, looking very, very strong for the shares. That should be enough to get the shares up to the top of this rising trend channel at just shy of £2.50 by the end of this month. And the way things are going, maybe by the end of this week. Another Golden Cross situation as well, so looking pretty well set fair for Jersey, and nice bounces off the neutral RSI 50 level, which tends to be a continuation signal for a rally. Only back below that last resistance from back at the end of last month of 188, really delaying the upside scenario, but it looks like 250 and perhaps even more than that actually. We could see the shares accelerate into a resistance line which is heading towards £3 maybe over the next couple of months as well. So looking very good indeed for Jersey. On to the punter's favourite at the moment, which I would say the crown goes to Kefi. A lot of interest, which was noteworthy when the shares were in the 0.8, 0.9 area, and the sort of speculators got it right this time with a nice straight push through the 200-day moving average. That's a very strong signal. Normally you have a pullback to test it, but we've gone straight through it like a blowtorch through butter. 1.16 level, the 200-day line above that, looking for 1.7, 1.8, perhaps by the end of this month, even with all the Easter holidays, etc. Only back below, well below a penny, I think at this stage kills the idea of a pretty big move there for Kefi, but I'd be surprised if we actually settle below the 200-day moving average ahead of 1.7 and 1.8. On to Live Company, which has become one of the better post-pandemic plays. Here we've got this tight little bull flag, which is just sort of toying with the resistance line target that I had before. 9.5 pence was the previous target, and above 9.5, looking for 12 pence, which is the upper parallel of the price action that we've had. Well, actually stretch that a bit higher. Actually, it's a rather steeper angle there, so maybe 12.5 pence. While we hold above 8.9 pence at the floor of this current flag. We also had a very bullish cross there for the 50 and 200-day moving averages last month, which heralded the start of the move. On to Nanoco, which sort of feel I didn't give enough coverage to, largely because it had a rather bad history of letting investors down, I think, previously. But here we've got quite similar setup to what we're seeing at Live Company, with the bull flag at a previous target area 28 pence, above 28 pence. Looking for as high as 38 pence, which is an August resistance line projection at the top of that triangle. Once again, we've got a golden cross, which should hopefully power the shares higher, and we've gapped up today, which shows there's plenty of momentum here, and maybe the shares have caught out a few of the bears in the stock. On to Sareum, another stock which I probably didn't give enough coverage to, but gapped through that resistance line there from August. And broke the top of the gap day, which was 202, above 202, looking for at least the 200-day moving average at £2.70, well, so £2.73 in fact, and after that a £3 target seems to be fairly well baked in, but the unfilled gap to the upside and the rising 50-day line suggests that there's going to be plenty more power here. If you're cautious of the shares, maybe wait for an end-of-day close through 250 as a momentum signal, but that unfilled gap to the upside and the holding the gap, the top of the gap, a very strong signal indeed. Onto a stock which is not quite in the same strong category, but who knows, it might come back for another go. We've got Supply Me Capital, and we've finally broken that trend line from basically May last year. That was around the 009 level, and above 009 looking for 0.15, which is the top of that rising trend channel from the end of January. Not much consolation for those who are in at higher levels, but 0.15 obviously much better than 0.09 pence. Stop loss back below 0.08 really. I think that's probably the tightest you can make it, but ideally 0.07 on that. Another bear target, actually, perennial bear target, is Tern, but seems to be, literally living up to its name. We've got a rising 50-day moving average near the lows. We've had the bear trap below 10 pence as well. And the current situation is that we're just breaking a line of resistance, which was from last month. That was broken around 12.5 pence, and above that, looking for at least the 200-day moving average at 16 pence, and that's last month's resistance. If we can break that, then who knows, the shares might flip up towards the low 20s over the following month. Nice bullish divergence line there as well. That does suggest that this is a proper, sustainable rally situation. Just a couple of stocks to go now. First one is Warpaint, which, if I can get the right ticker code, has had a sort of bumper announcement today. I think sales up 60% or something like that. Broken a line of resistance there from September, gap through the 50-day moving average, above the 50-day line at 128, looking for at least the 200-day moving average as high as £1.62, maybe by the end of next month. Finishing off with one of last year's heroes in many respects, Zephyr. Here we gapped to the upside. Yesterday we broke the top of the gap higher day, and we've held the top of the gap, so everything looks good there. The view is that above the floor of the gap, above around 6.6 pence, looking for 10 pence by the end of next month. A nice sharply rising 50-day line as well, backing the latest move to the upside. That's it from me today. More updates